Good afternoon once again. We are almost at 80 to 90 attendees, which is really good. So good afternoon once again, and welcome to the first virtual event for the Financial Inclusion Forum Africa group, which is in conjunction with the GSMA, the Ghana Chamber of Telecommunications, and eProcess, which is Ecobank. This is part of our Mobile Technology for Development series of programs, the first of which was our maiden conference in March in Accra, just before COVID-19. My name is Dr. William Deban. I'm the chair of the Financial Inclusion Forum Africa, which is an organization of people who are passionate about financial inclusion in Africa. I'm also the Market Engagement Director at GSMA. And I would encourage all of you to go onto our website and also to register to be part of the forum. Before I introduce our speaker, there are a few house rules I'd like to share. First, you've all been put on mute, so you will not be able to say anything. But we have a Q&A section, and I would encourage you to use it and put in your questions, even as the presentation is going on. I would encourage you to put your name and your organization so that we will know who is asking the question. There's also a button there that allows you to rate the questions. So if there's a question that you have that has already been asked, you can just, there's a thumbs sign there that you can just click, which would then enable us to know how many people are actually in favor of that question or want that question to be answered. This is about an hour's event, and we'll try to keep it to an hour. We'll have about 30 to 35 minutes of presentation, and the rest will be answering the questions that you would have put forward. So please, I would encourage you all to put your questions there. So to our presentation. In about 2006, 2007, I was at a Financial Inclusion UK event in London, and there was a gentleman who was demonstrating how you could move money through mobile phones. As it were, the gentleman was Nick Hughes and the product was M-Pesa. Today, we have over 1 billion registered mobile money accounts, 1 billion. We've come a very long way since then, and what a great win it is for financial inclusion. Today, we are privileged and honored to have Nika Nagavi, who is the Data and Insights Director for the Mobile Money Program at the GSMA. She's the author of the State of the Industry Report on Mobile Money 2019. She's an experienced researcher and also loves Ghanaian jollof. So apologies to my Nigerian friends online. Nika, your audience. Thank you.
Nika, your mic is on mute.
You're mute.
Okay, sorry everyone. We present as well. Struggling with this. Sorry everyone. So thank you so much, William, with that introduction. As William mentioned, I'm Nika Nagavi, the director of the Data and Insights pillar of the Mobile Money Program. And I'm very excited to give you an overview of the State of the Industry report that we published back in March. And this is our 8th edition of this report. And we normally launch this report during Mobile World Congress, but this year, because of COVID-19 outbreak, we had to launch it digitally, and I'm so happy to give you an overview of how the industry has progressed in the past year. So just one caveat before I start, this report is based on the insights and the data that were captured in 2019, and it was written towards the end of 2019, before the COVID-19 outbreak, so it won't have any data or flavor of the impacts of this pandemic on the mobile money industry as a whole. Also, I think it's a bit too early right now to give a comprehensive overview of the pandemic, and this will be part of something that we'll do in our next year's report. Recently, we have published a set of recommendations for central banks. If you're interested to understand more of the industry's kind of view and angle on COVID-related stuff, I can share that at the end with you guys. With that, let's just dive in. And before we jump into the content, I'll just provide a quick overview of our methodology. This report provides a quantitative assessment of the state of the mobile money industry based on mobile money deployment tracker, global adoption survey that we ran in 2019, and mobile money estimates and forecasts. So we've been running this survey for the past 8 years, and it's a supply side survey. Is a bit different from the data that you see from other reports such as Findex, and is designed to really capture the quantitative information on a range of kind of operational metrics from the mobile money providers globally. One more caveat is that we don't really audit the data and information that is given to us, but we do our best to clean the data, synthesize it, and make sure that the information are correct. So now let's dive in. Sorry to click. With that, let's just dive in to the content and look at the biggest stories of the year. As William mentioned, and most of you have seen the big headline figures, 2019 was a momentous year for the mobile money industry as the number of mobile money accounts surpassed the 1 billion mark. We believe that this is a tremendous achievement for an industry that is just over a decade old. We've come a long way indeed, as William also alluded to that. And the mobile money industry of today is a host of seasoned providers with a broad set of operational capabilities, a full suite of products, and a global reach. In terms of coverage, we've seen mobile money services are expanding the reach of financial inclusion and are now available in almost all countries where less than a third of the population have an account at a formal financial institution. So let's see where most of the growth in 2019 came from and how the industry is growing and globalizing. So, sorry with that. Basically, Sub-Saharan Africa remains the enduring epicenter of the mobile money, adding over 50 million new registered accounts in 2019. And what is very interesting here is that though East Africa is still accounting for more than half of the accounts across the region, mobile money no longer is a East African story, with West Africa taking up a bigger proportion of accounts across the region. Currently, Sub-Saharan Africa has just under 470 million mobile money accounts, and at the GSMA we forecast that these account adoptions across Sub-Saharan Africa will remain strong, and the region will surpass the 500 million mark by the end of 2020. And obviously the impact of the pandemic meant that more people are rushing to get a mobile money account, so this kind of figure is quite achievable for the industry. One more thing that is worth highlighting when it comes to mobile money and Sub-Saharan Africa is that there is still a tremendous opportunity to unlock the growth and increase financial inclusion across the continent's mobile money sleeping giants. And we believe these are Nigeria, Ethiopia, and Egypt. These three most populated countries were kind of left out of the mobile money revolution, and they've all had unfavorable conditions for mobile money uptake. But this won't be the case for long. In 2018, for instance, Nigeria and also Egypt softened their policies to allow new players to offer mobile money, including mobile network operators. What we've seen in 2019 was that the Central Bank of Nigeria granted approvals in principle to 3 payment service bank applicants, 2 of which actually were from subsidiaries of local mobile network operators. So looking closely at the Sub-Saharan African the sub-regional figures, we can see that most of the growth was driven by strong growth in West Africa, which added around 21 million new accounts, and Central Africa, which added around 6 million new accounts, as well as steady growth in Eastern Africa. It's interesting that despite East Africa kind of reaching a maturity level and becoming a bit saturated, it still had a steady growth of nearly 10% in 2019. Of course, we need to think, when we talk about East Africa, we can't discount Ethiopia. And as I mentioned, with liberalization of the telecom markets moving ahead, there's a lot of opportunity in the numbers across the region as a result being much bigger than they are today in a few years. Obviously, West Africa has seen a lot of change. There's well-documented and publicized growth about Ghana, and but we've also seen growth across West Africa, such as in markets such as Côte d'Ivoire and Senegal. The other point that is interesting to mention is going back to Nigeria and the level of investment that went into the fintech space in Nigeria. We've kind of covered this in detail in the report, so I encourage you to have a look at that. It's interesting to see the level of investment that went into the likes of PalmPay, OPay, Flutterwave, and other players in the market. So also one more thing to emphasize here, we've seen unprecedented growth in Central Africa. Cameroon and Congo are 2 markets to highlight. And I think one of the other markets that you need to keep a close eye on in the coming years is DRC. And the larger MNO groups are present in that market, and that market holds a lot of promise in terms of future growth. And if you're interested for more kind of regional figures, it's both available in the report and also the website that we have, which is called Mobile Money Metrics, where you can download some of these basically data and play around with it. So one more thing to mention is that mobile money is far from just an African story. We saw significant growth in Asia, and the overall growth in Asia, we know that it was hampered by the Indian market, where several players closed their operation due to an increasingly burdensome regulatory and operating environment. Despite this, across the region, we see more than 40 million accounts being added. What's interesting to highlight in terms of the story around India is that Nigeria kind of PSB regime is modeled on India, and it remains to be seen what kind of lessons can be learned from the implementation of the payment service banks in Nigeria. So moving to the next slide, what is key and what has been key in terms of the industry growing and globalizing was basically the agent distribution network and the ability of the industry to digitize funds, which is very different from other channels that are available to the unbanked, including banks and fintechs. So we know that the industry continues to invest in agent networks, and this means that the industry is actively generating sustainable sources of income, which is critical to achieving SDG 8 targets, which is around decent work and economic growth. So what is very key to highlight here is that the number of mobile money agents in 2019 reached 7.7 million, and more than 50% of these agents are active. In terms of commissions, the industry is paying 1.1 billion in commissions to these agents, which means that the industry is contributing to an additional annual income of around $840. Actually, I need to minimize this so you can see all the parts of the slides. Obviously, this represents a sizable net gain in income. We know that some of these agents are earning their income from basically outside the agent commissions, and they're also small shops and mom and pop stores. So they operate their own micro kind of retail business. So this stable income means that they can spread the cost of the business across different basically channels. So the other thing that is key is that mobile money has been instrumental in reaching the hard to reach areas, including rural areas. So in terms of the spread of the industry and how it's reaching the last mile, we see mobile money agents have 7 times more reach than ATMs and 20 times more than bank branches. And this is quite key in how the industry is reaching the bottom of the pyramid and the rural and purely underserved. Sorry. So moving to the next slides, this is a very interesting story because I recall when I joined the mobile money team back in 2004, the whole industry, the size of the whole industry was around sub 200 million. Today, we see that customers are using their mobile money account more often as part of their daily activities. In fact, the number of active mobile money accounts alone reached 372 million, which is very impressive. At the same time, there's another metric that in the early days, most of the financial inclusion community and also GSMA was kind of tracking. That was a good metric to gauge the scale of the industry on, and that was how many services have surpassed this 1 million accounts. And what we see is that 77 services in 2019 had more than 1 million active accounts, and 21 of them had more than 5 million active accounts, and this is up from only 27 in 2014. So the industry again has come a long way on this metric. This is a very interesting analysis that we've done this year. We're often asked about the role of mobile money in kind of driving financial inclusion, especially amongst the poorest and most financially excluded population. And as I mentioned earlier, we don't capture any demographic data. It's a supply side survey. So by doing this analysis based on World Bank data, we can see that this is the case, that mobile money is really the main path to financial inclusion in most low-income countries. The y-axis actually shows the GDP per capita, and the x-axis shows the share of adult population without an account in a financial institution. So in the kind of right bottom corner, what we see is that in markets where both GDP per capita is the lowest and a substantial proportion of adults don't have an access to a financial institution account, mobile money is quite prevalent and is quite strong. Just wanted to caveat one thing, if you're having a bit of difficulty digesting this, is that these darker spots on the graph show the size or the share of the adult population with an active mobile money account. The other thing to caveat is that obviously our survey is based on a strict NDA, so we can't really share the name of the markets if you had any questions relevant to that. So the other thing that is quite interesting, and it was one of the industry firsts or key milestones of the 2019 report, was that the industry became a $2 billion a day industry. Total transactions grew by 20% and reached 690 billion on annual basis, which means that the industry is processing close to $2 billion on daily basis. We forecast that this strong growth, if anything, will endure, and by 2023, over $1 trillion will be transacted via mobile money platforms on annual basis. This translates into over $2.8 billion on daily basis. What's important here is that this growth and scale is a positive signal that the industry is showing higher levels of trust amongst customers, greater relevance for the customers and users, and it also showcased the capacity of the mobile money industry in digitizing and increasing amount of digital capital. So moving now that we've talked about the big numbers and the scale of the industry, let's look at the commercial sustainability and the shift towards payments as a platform. Just wanted to highlight one thing that I'm sure most of the users might not be familiar with, is that last year we published a report on evolving the mobile money business model and the transition to a platform-based business model. We call it payments as a platform strategy. I can share the link, but in a nutshell, this strategy embodies a 5-pillar shift centering around lowering barriers for partnerships or creating a more kind of accessible environment for third parties, and moving away from this legacy one-on-one negotiation and one-off third-party integrations. As a result of this shift, a diversified revenue model will be cemented for the industry, which where where a substantial portion of the revenue will come from adjacent services, businesses, and governments. So let's look at how the industry is doing on this front. Obviously, not all mobile money providers are profitable, and that's the reality of the business today. But in 2019, we saw a very promising trend. A growing number of mobile money services crossed the threshold to become commercially sustainable. In fact, 60% of providers reported a positive EBITDA. One point to highlight is that revenue diversification is a key in building a sustainable and viable mobile money business model. Another key trend that we saw in 2019 was that we saw a significant drop on reliance on customer fees. In addition to that, we saw that 21% of providers are focusing more on enterprises and diversifying their revenue models. So overall, these findings suggest that there is this strategic shift happening in the industry, with an increasing number of providers moving towards this platform-based strategy, encouraging value to remain digital and expecting their and basically expecting to expand their value prop to adjacent services such as credit, savings, and insurance. So moving to the next slides, what's key here, let's look at the to be able to understand the previous kind of drivers of the trend that I mentioned, is to look at the digital ecosystem evolution. Two key trends basically in 2019 indicate that the industry has reached what can only be described as a digital threshold. So for the first time, and this is trend one that you can see on the left-hand side of the slide, digital transactions represent the majority of mobile money flows. This means that a larger proportion of how money is entering, which is all you can see on the left-hand side. I don't know whether you can see my mouth. The light blue basically and the dark blue section, and a larger proportion of how money is exiting the system is through digital means rather than cash conversion. And just to clarify, digital transactions are digital in, which is all of the light blue shaded on the left-hand side, digital out, which is the light orange bit, and circulating value in the middle. So the second trend that is also an industry first is that for the first time, more value is circulating in the mobile money system than exiting. In fact, this total value in circulation, which is the circle in the middle, reached $22 billion in 2019, significantly surpassing what you can see is exiting, which is $18 billion. And this is mainly P2P and merchant transactions. So overall, kind of these trends show that the industry practitioners have really pinpointed what keeps value circulating in the mobile money system. So now let's look at each of these trends in a bit of more detail. Trend one, i.e. digital transactions for the first time exceeding cash in, cash out transactions. This was mainly due to the industry becoming a more integral part of the financial ecosystem and lower barriers for third-party integration. So let's look at interoperability, which is the catchphrase for the industry. Like other payment infrastructures in the early days, mobile money was a standalone tool, and it wasn't really connected to a centralized third-party platform, and largely it was separate from other sources of digital funds. This has, of course, changed today, and mobile money industry is increasingly interoperable today. In fact, in 48 out of 95 markets, or in most markets, customers can transfer money between accounts held with different mobile money providers and with other financial system players. On average, the mobile money services with bank integrations are connected to 13 banks. When it comes to mobile money account-to-account interoperability, we've seen interoperable transactions have grown by 40% between 2018 and 19, and this hasn't really cannibalized the on-net P2P transactions or transfers, which was one of the biggest fears of the providers in the early days. So beyond this kind of domestic interoperability and integrations with banks, the industry is becoming more integrated with international financial system players. Yesterday was the International Day for Family Remittances, and we celebrated the fact that the mobile money industry has managed to digitize 7.3 billion international remittances via its platforms, and this has significantly increased over the past few years. This growth in international remittances was primarily due to a stronger kind of appetite by the providers to integrate and interoperate cross borders and due to integrations with both kind of traditional and non-traditional digital remittance service providers such as Western Unions and MoneyGrams of this world, and more digital ones such as Azimo, WorldRemit, Momo Money, and a few others. So moving on, and still we're on the trend one. One of the key drivers for increased digitization was due to low barriers for third-party integrations. We know that plug-and-play access to mobile money services through APIs is crucial in being able to kind of shift your strategy towards a platform-based play. This basically significantly reduces the time for integration with startups and other third-party players, and can significantly increase the range of services available to customers and encourages more funds to stay digital. So a few years ago, a handful of services had open APIs. However, our 2019 Global Adoption Survey showed that the industry is becoming more accessible to third parties, and 20% of providers published their APIs or opened their APIs. This means that as a result, each service provider is on average connected to 98 billers, 52 organizations for bulk disbursements, and over 13,000 merchants. So now moving to trend two. So just want to make sure that you guys are still following, which was around more value circulating in the mobile money system than exiting it. Earlier I mentioned that this reached $22 billion. What's interesting here is that there is no sign of like P2P transfers slowing down. In fact, even though P2P is one of the most scaled use cases of mobile money, the total value of P2P transfers has more than doubled in the past year. This continued growth and scale is obviously eclipsing the healthy growth in merchant payments. However, what's key here is to highlight is that this is not a negative story for the industry. Because we estimate that a substantial proportion of these P2P transfers are made by small businesses and micro entrepreneurs, and is basically covers the purchase and payments for goods and services. We did a research piece a couple of years back into Central African markets, which showed that, for instance, 80% of micro SMEs who were part of our research were using their mobile money personal accounts, and 83% of them, actually 80% of them had a mobile personal account, and 83% of them were using this personal account for business needs. So we see a similar trend in other mobile money markets, and we know this is driven by a confluence of factors. Obviously, the informality of the MSME sector plays a big role in this, and low levels of like ownership of necessary documentation when it comes to identity, business documentation, and also frictions in the kind of user experience of merchants and customers, and the lack of a compelling value proposition. But however, as you will see in the next couple of slides, basically leading providers have already taken big steps to addressing some of these challenges. So I'm just going to pause here and mention that we're still on trend two, and we're talking about merchant payments. So for those of you who've been around for a while, merchant payments is one of the most kind of complex use cases of mobile money, because the convenience for customers is not enough. And success really relies on offering merchants benefits that cash really can't compete with. So providers really need to pinpoint a strong value proposition for micro SMEs. We know that access to financing and tools that help MSMEs increase their productivity are both on like micro SMEs wish list. But what we saw in 2019 was that 74% of providers were offering additional management tools to micro SMEs. This was either analytics, inventory, or accounting tools, and 29% of them offered credit lines to agents and 19% offered credit to merchants. So the other thing, and I think, William, maybe we're running a bit out of time. Maybe we wanted to have more time for discussion and questions. Maybe I can whiz through the next few slides so we finish around 1:45. Does that make sense?
Yeah, that's fine. Yeah, thank you very much.
So one of the things that is a barrier for like kind of merchant payments to scale is the friction in the customer journey. Obviously, the industry offers a variety of acceptance technologies, and today USSD is the main commonly used acceptance technology for merchants, but we see a lot of promise based on QR codes. In 2019, we saw that merchants who used QR codes transacted 3 times more in value. One point to highlight here is that QR codes has been widely spread and adopted in China, even for small retailers and for low-income merchants. So the key question, I think, for the industry is that whether QR codes will still see the same level of adoption outside China and in markets where there are big gaps in smartphone adoption and mobile internet access. We know smartphone adoption is on the rise across emerging markets, and especially Sub-Saharan Africa. In fact, smartphones now outnumber basic and feature phones in over half of all the countries in Sub-Saharan Africa. And despite this growth, we can see that still 9 out of the 10 mobile money transactions in the region are done through USSD. So basically, QR codes can be an effective way of overcoming this issue, because at the very basic, you really need a QR code kind of the printout of the QR code identifier, and you don't need to, as a merchant, and you don't need to have access to a smartphone. And also, if implemented, it can be implemented with USSD in behind or in the backbone. So the other thing that I kind of discussed with William yesterday was around the harmonization of QR code standards. We've seen markets such as India, China, and Indonesia coming up with harmonized QR codes, which will really help users and customers and merchants with different devices and apps to use the system seamlessly and beyond national borders. So the other thing that I kind of want to quickly mention is that the industry is also bridging the gap between offline customers and online merchants. E-commerce transactions doubled in value and more than doubled in volume. But one interesting key trend that we saw was the rise of social commerce and users purchasing goods from channels such as Instagram, WhatsApp, and Facebook. We see a huge potential for the industry to get involved in that space and kind of resolve some of the barriers in customer journey and formalizing that sector. Moving to the next 3 slides. So one of the other things that is key in revenue diversification is offering adjacent services such as savings, credit, and insurance. what we've seen is that mobile money is cultivating a formal savings culture. Over $241 million were transferred to mobile money enabled saving accounts. And we know that in June 2019, at least 26 million unique customers saved via mobile money. The industry is uniquely positioned to help savings groups go digital, and we have more information on that in the report. Moving to credit, we know that there are various ways in which the industry can get involved and participate in provisioning a digital credit service. Nearly 70% of the respondents to our survey say that they have a partnership with a regulated financial institution in order to offer credit. And one study showed that such partnerships in Kenya, for instance, were a bit different from other partnerships in the sense the NPL or the non-performing loans were lower amongst mobile money providers that had such partnerships compared to other digital credit providers. So insurance is one of the most tricky adjacent services. So mobile money enabled insurance are obviously showing promising signs of growth, but there is still room for more growth to happen in this sector. The top 3 products that were offered in 2019 were life, health, and accident, and most commercial models in use were premium. So just want to quickly whiz through the regulatory slide. We know the industry is successful today thanks to the regulation that was calibrated to enable low-cost services for financially excluded. And we did a study a couple of years back with Harvard Business School that we saw a clear correlation between mobile money adoption and those markets where regulatory environment was enabling. So what we see is that mobile money is mainstreaming into national payment infrastructures, and the regulatory landscape is kind of evolving. The traditional MNO-led model is still very prevalent across Sub-Saharan Africa, but there was a shift towards payments institution licensing. Few examples is Tunisia, and also even in key markets such as Tanzania and Kenya that happened. And similarly, we've seen State Bank of Pakistan introducing new regulations for EMIs and with lower entry barriers for non-banks. And I mentioned the trends around Nigeria earlier. So there are 2 other policy trends that we've seen that are hindering the industry's ability. Mobile money taxation and also data localization is part of both, and I encourage you to read those section in the report. So surpassing this 1 billion accounts is a big achievement for the industry, but it doesn't capture this kind of big headline figure, doesn't really capture the empowerment that comes with owning a mobile money account and the ability to access new life-enhancing services through the mobile money ecosystem. So from closing the gender gap to access to essential utility services, delivering urgent humanitarian cash assistance, and digitizing payments for agricultural value chains. We see the industry helping millions meeting their basic daily needs and improving their livelihoods. This slide is quite busy. Just want to highlight 2 data points that are quite strong. Payments for utility services such as energy, water, accounted for 44% of the total value of all bill payments processed by the industry. And this is both off-grid and centralized utility services. The other point is around digital cash transfers. We've seen mobile money platforms have been used to deliver cash and voucher assistance and in at least 44 countries since 2017. And in doing so, the industry has enabled CVAs to be delivered to over 2.7 million mobile money accounts used by the people who were affected by crisis. So as we enter the new decades, there are obviously new challenges for the industry. COVID-19 can be both seen as a challenge and an opportunity, but a few to highlight is around taxation, data localization or infrastructure localization, as well as government-led interoperability solutions that do not really take into account operational and commercial mobile money models carefully. All of this can stifle the innovation of the industry, but we hope that through open dialogue and all the actors and players collaborating, these issues won't be a big hurdle. Thank you so much for listening. And as you can see, this is all the data points that I covered.
Oh, thank you very much, Nika. What an exciting story. And for me, I find this very exciting because this is something that is happening on the continent. This is something that is growing. It's not very common to find any industry, even over the past 100 years, that is actually benefiting so many Africans directly, and in the way mobile money has done over the past 10 years. So thank you very much, Nika, for the information. I will go straight to the questions that have been put here. So, Nika, we have one first question. It says, in the payment and card industry, EMV introduced chip and PIN cards, and the PCI Council introduced PCI DSS. These two technologies have helped reduce fraud in the card industry. Do we have any technology cybersecurity frameworks like the DCI and PCI DSS that telcos or mobile money companies have to comply with to minimize fraud?
That's a very interesting question, and I wish my colleagues from the regulatory team were with me today. But so basically, one thing to highlight is that the mobile money team of the GSMA, in collaboration with the industry, came up with mobile money certification, which shows how providers have a kind of high bar or standards for a range of basically issues related to fraud and managing the risks of fraud. Apart from that, so that kind of certification shows that you have a high bar of standards when it comes to these issues, and 13 providers so far have been granted the mobile money certification. If there is no like common global body that I know of, but obviously mobile money services are under the purview of the central bank and the e-money license. So that requires a certain level of measurements to be in place.
Okay, thank you very much. There's another question which is related to Ghana. It says they might have missed a comment. Is Ghana still the fastest growing mobile money market in Africa?
Yes, that is true. So Ghana is the kind of the star of the West Africa and one of the key markets in the global landscape of mobile money.
Thank you. I'm sure it makes a lot of people quite happy on the call. The next one is from Carl from Mpampe, Ghana. He says, there was a year-on-year decline in active users and transaction volumes in West Africa. Do you have any insights on the drivers of this decline?
Is this in the past or? Okay, so I can only comment on the activity rates declining, and this is more of a definition story. So, and how people measure that and how different providers make accounts dormant or not. So, for instance, in certain markets, we see accounts that are dormant are still accounted. So they report registered accounts like that. So the activity rate might be reflected as negative because there are so many dormant accounts that are out of like the cycle. But I don't recall the volume and value of transactions going down. And I see most of this activity rates is because of like the dormant accounts that exist in the industry.
The next question was about the banks that are connected to mobile money. I think you mentioned 13 and someone wanted clarification. Was it 13 banks across the whole of Africa?
So no, in markets where there was an integration with banks, on average, the number was 13.
Okay, thank you very much. Now, David from Ecobank Ghana says, most banks in Sub-Saharan Africa have a lot of limitations in remitting funds to express accounts or mobile money accounts currently. What are the reasons for these limitations? To what extent should banks rely on mobile money as a KYC for opening bank accounts?
Okay, so in terms of the limitations, I'm not sure if I would be able to answer your questions, but I see the mobile money and the banking industry playing a very complementary role. So it's not one versus the other one. So in a sense, mobile money is extending the reach of the banking industry in areas that there are no access to banking branches, but at the same time, mobile money really relies on the banking infrastructure to be in place, from the liquidity management, trust account, and everything else. So, but what we've seen over the years is that the flows from bank to mobile, mobile to bank are becoming more balanced. Whereas in the early days, it was more transactions were from bank to mobile. We see a lot of mobile money account to bank transactions, and that is for savings and paying suppliers, etc.
Thank you. That's really interesting, the way the money is flowing back from mobile money to accounts, because it enables a lot of financial inclusion to happen. Now, Kenneth from eProcess, and this is a big question. Do you have a prediction as to when Nigeria might eventually allow mobile money market to thrive? It's a loaded question, Nika.
So I would have, with the like in principle licenses and everything that has happened the past 2 years, I was expecting 2020 to be the year of mobile money for the Nigeria market, but obviously COVID-19 means that a lot of things that have to operationally happen in the markets are kind of slowing down. So let's watch and see. I think if it wasn't for COVID, probably this year would have been the year that we saw a lot of like adoption and increase and rollout of the mobile money services across Nigeria.
The next question is from Blessed Chingba, I think from Zimbabwe. Says, thank you for an insightful presentation. There seems to be a reluctance to offer mobile money interoperability across networks by MNOs in some countries in Africa. Usually, the larger MNOs do not wish to share the cake with other smaller MNOs. However, it is always the customer who suffers from this lack of mobile money interoperability. How have the larger MNOs managed to cooperate with smaller MNOs to establish mobile money interoperability in other markets you have worked in? Has it been an issue of regulation forcing them to work together? And this is from Zimbabwe.
Okay. This is a great question. We published 2 reports on Friday on interoperability that I encourage you to have a look at. I totally agree that there was this myth around losing market share if you're a predominant or the dominant player in a market as a result of interoperability, and that hasn't been the case. So when interoperability is done right, when it's not mandated, and when it's industry led, and the industry players decide on it and decide on a commercial model that works, we've seen that both interoperable transactions will increase, but we see that the market share won't be that much impacted. And that the case that I'm referring to is Tanzania. So the bilateral model in Tanzania worked really well initially between Tigo and Vodafone, and later on other operators joined. So I'm with you on like basically busting some of these myths around interoperability. There shouldn't be, the industry is behind mobile money becoming more interoperable, and that's the long kind of term goal of the industry. The issue more is around finding a solution that works from the commercial perspective for the providers and implementing it when the industry is ready rather than mandating interoperability.
Another great question, I'll probably have time to take a couple more, says, to what degree will the mobile money industry impact the banking sector over the next 5 years in terms of customer decline or change of strategy on the part of banks? What are banks currently doing to survive?
Very good question. Again, I think for me, mobile money and banking industry are playing a complementary role. And what we've seen from Findex last year, the early insights that came out was that there was a correlation between owning a bank account and a mobile money account. And we see mobile money accounts and ownership of mobile money as a stepping stone towards owning a more sophisticated kind of financial institution account, which is a bank account. So obviously, mobile money providers can't intermediate funds. They can't offer you credit, savings, and insurance products without a partnership with the licensed institution. So that will remain, and I think there is enough room for both players to coexist and complement each other. And I see both of the players coexisting, innovating, and becoming smarter on how to address the users' needs.
At the moment, it's 2 o'clock. If you don't mind, we have well over 200 people on the call. And if you don't mind, we'll take about 2 last questions, and then we'll close. We just want to respect your time. And the rest of the questions, we will answer them and then post it on our website so that you can go there and then you can see the answers to them. So one question here says, we are in the era where the world is going digital. My question has to do with the security of our hard-earned monies, which most often subscribers fall victim and they end up losing their monies. How secured are our money?
Okay. When it comes to fraud, I would say that the cases of fraud via mobile money have been minimal over the past decade. But obviously, like any payments instrument or any other instrument, every service is posed to or open to risks of fraud, and the industry is doing a lot in identifying and addressing those challenges. But so far, I can say the number of like fraud cases have been minimal. I don't have the figures, but I can like dig out and we can share it by the answers later on.
And our final question is from Alvin from PEG Sula. It says mobile money adoption has gained significant traction amongst people in the poorest community whose literacy levels aren't the highest. To what extent does the customer literacy level affect platform based growth of mobile money usage and adoption via the use of app and possibly QR codes, etc., as these would need to have simple and uncomplicated usage experiences for the demographic. So I think the question is more around financial
literacy. I think financial literacy goes hand to hand with tech savviness and being comfortable to use technology. So at the GSMA, we've done this toolkit called MIST, which is addressing the not financial literacy, but general technology literacy of the users. And we've recently added a module to that, which is on financial inclusion and mobile money. But still, I see financial literacy as one of the biggest barriers for more adoption. And we asked in 2019, we asked about the barriers for adopting and using mobile money amongst like 14, 16 markets. It wasn't on the top of the list, but it was one of the top 5 barriers. There is, I think, again, there is a lot of need for the industry to innovate, to think about the end user, and also to do more like kind of HDDs and the design implementations that really address all kinds of demographics that are going to benefit from the mobile money services.
Okay. Thank you very much, Nika. I think we'll end here. And I just want to thank all the people who have joined this call. I find the story very exciting, and I hope that we will take the learnings that we've heard here. We have all the reports on our website. You can also find them on the GSMA website, and then you can find a lot more articles on mobile money and what it's doing on the continent. And we hope that some of you will be able to take that forward to provide more services. Also, if you want to join the Financial Inclusion Forum Africa, if you're passionate about financial inclusion in Africa, it doesn't matter where you are in the world, go onto our website, it's fiforumafrica.org, and you can join, and then you can also give your views there. But also, whenever we have events, we'll be able to let you know. And this is a series of events. We'll be having some in the next month or so on different topics. So once again, thank you very much, and thank you very much, Nika, for taking the time to share the presentations with us. Thank you.
Thanks for inviting me. Thank you, everyone. Thanks.
Bye.